Voice of FinTech.
Welcome to Voice of FinTech, a podcast mapping out the Swiss and global fintech scene, connecting fintech enthusiasts with startups, incubators, accelerators, business angels and VCs, and incumbents interested in partnerships. Voice of FinTech will help you navigate the fintech ecosystem. Here you can listen to the startup founder stories, what investors and incumbents are looking for when dealing with startups, and find out more about resources provided by incubators and accelerators. My name is Rudolf Falat and I'll be hosting this podcast.
So I just wanted to introduce these two hosts really quickly. So my name is Rachel Dwyer. I'm a project manager for Fishbowl Live. And today we have FinTech 2021 Success Stories, a critical view by hosts of Voice of FinTech. And it's with David Yakobovitch and Rudolf Falat. And then one thing I did want to mention before we kick this off is that we have released a new follow feature. So if you like this discussion, you can follow David and Rudolf on the app, and then you'll be notified of any future events that they do. So for now, I'll leave it to you both.
Wonderful. Thank you, Rachel, for the introduction. Thank you for Fishbowl for hosting it and all the great features that they came up with now. And obviously, thank you so much, everyone, for joining us. As some of you may have joined already a month ago when we kicked it off, we looked at the success stories in FinTech from 2021. So the entire year. Now we're doing a little bit of a refresher or a catch-up. So we're going to focus on the last 30 days or last month, what's been going on in the world of FinTech. Of course, a lot of you are based in the US, or almost all of you, right? So we focus on the US, but we'll have a bit of an international perspective, not only for my benefit, when you sense an accent there, but maybe, for everybody's benefit, because we believe that FinTech is inherently global. It is a technology game. It's a technology business where there should be no boundaries, right? It's not like you have to go around the world and build factories. And of course, if you have a great domestic market across the United States, that's wonderful. But in the end, if you want to have a unicorn or decathlon, you may want to think about even bigger market than that. So before we start talking about this, I'll start to give you a bit of perspective if you haven't joined us before. So my name is Rudy Falat. I started Voice of FinTech podcast in June 2019. So it's not a COVID boredom baby or anything like this. And I started this by talking to founders, incumbents, investors, ecosystem hub leaders, and thought leaders around the world. And then David joined us later on with hosts also based in Asia, in Africa, and in LATAM. And with David and others, we cover stories from the regions all around the world. I do the stories from Europe, US, North America, Asia, everywhere. But obviously, it's great when you have a different perspective. So, for example, I think on Thursday, we'll have a new episode from South Africa as well. So thanks again. What we wanted to start off with is basically just looking at a couple of success stories, and we're going to have a bit of maybe a more balanced view, right? And by the way, as Rachel said, we can obviously let you speak, and we would love to hear from you. The way this is going to work on Fishbowl, that you need to raise your hand, and then we can give you a mic, so to speak. So it's kind of like a moderated event, like a webinar on infamous Zoom. For example, let's start with N26, and similarly also I saw an interview with the founder of Klarna on CNBC. Basically, the question was about raising money very quickly. For instance, N26 raised just now $900 million. So it's a German fintech company or a neobank that is worth now $9 billion. Now, a few weeks later, the regulator came in and imposed strict cap on N26 clients' growth. So how is that possible? They're telling them that you cannot have more than, let's say, 30,000 new customers a month. Why is that? Because they are not happy with their operations. So I just pause here and ask David if you've seen any sort of regulatory action like this exposing maybe cracks in the growth story and on the US side.
Thanks, Rudy, and hey, everyone. Great to meet you. I'm one of the Voice of FinTech hosts in New York City. And on regulation with FinTech, I think one of the cracks that we've seen during the pandemic is where neobanks and FinTech companies tried to scale really quick, and they just couldn't. One of them in the US is a startup called Blue Vine, and they're competing with Mercury and other companies. And you just could not reach a human for the life of you. And the process became so delayed because they had during the pandemic so many tens of thousands of applications. They literally shut down new applications. They just said, we're not taking applications because we can't process the backlog of them. And so I hear this concern from European regulators with N26 because this is not N26's first time to struggle. In fact, a few years ago, N26 had a big exodus of team members who no longer believed in the vision that the neobank was building. And so now, of course, they've come through that. They've accelerated, they're growing. But the challenge is you think to, well, for example, if you're in the States, in New York, perhaps you work with HSBC Private or Citi or Signature Bank or Wells or Chase or one of the others, and you can get a human, right? You can talk to someone, you can speak to a private wealth manager and get your resolution to any challenges that you're experiencing for your assets. I don't know if you can do that with Chime, with Robinhood, with N26, and with other companies. So I might be siding with the European regulators on this.
Yeah, even though if I were an incumbent, I would be happy with a limit like this. Right now, I found the exact number. The BaFin, the German regulator, said you can onboard maximum of 50 to 70,000 customers per month. So, if you were an incumbent, you would be very happy with that kind of high limit, right? And on this 900 million round, it was led by the US tech investors, Third Point Ventures and Coatue Management. In that respect, I also wanted to talk about Klarna and Square and Afterpay. So, of course, everybody heard about the deal of Square buying Afterpay. I can see the strategic logic there and all that stuff. Of course, complementary. Square big in the US, but maybe not having all the capabilities as Afterpay does. So that is related to another topic, which is BNPL, right? Or buy now, pay later. So everybody loves this. Now, on the other hand, are we then buying too much junk, the stuff that we normally wouldn't need? Perhaps, right? Also, what is the game here? And I saw Klarna, that is a leader out of Sweden, that is obviously a global fintech in this field as well. And he was asked by the journalist whether he is worried about Square buying Afterpay. And his view was that, well, by the time they figure it out, integrated and all that stuff for a year and a half, we are happy with our organic growth strategy and, let them be distracted. So sounded very, very confident. But one or two important points he made on, why as a consumer are you choosing this BNPL provider or the other, right? So when you're buying something online and you see the checkout button, which button will you choose? Will you go with PayPal in the US or Klarna or, Square Afterpay now or something else? And he was arguing that there are very little things that matter, and the consumers are very picky. And for example, in Klarna, when you see the bill, apparently you see also the pictures of the stuff that you bought. It's not some sort of a four-letter code for the company. And it was a month ago. You see your credit card statement, you didn't know you didn't know what you bought, right? So I don't know if you have any thoughts on this, David, as well, in terms of BNPL. Like if you use it, how do you choose which one to use? You don't pay interest on all of them, on any of them. So as a consumer, which one would you side with?
Yeah, so buy now, pay later, BNPL, it's nothing new. I remember before I moved to New York, I used to buy a lot of furniture when I lived in Florida, and I would go to Home Depot, and Home Depot had 12 months free interest. And I go to Rooms to Go, 12 or 18 months free interest, as in the same equal payment every month for 12 to 18 months. But this was a manual process. You'd have to work with the credit card merchants like Amex, Visa, MasterCard to get it done. And now, of course, Home Depot uses Klarna and Rooms to Go uses Affirm. They no longer do it how they did it manually. They're partnering with the big players. If you are these consumer goods stores like Home Depot and Rooms to Go, buy now, pay later with Affirm and Klarna is a win-win because you're no longer taking 12 or 18 payments, you're taking 4 payments. So consumers are paying more up front. Ultimately, the consumers are getting shafted by having to go with these process. I think it's great, though, as a consumer, if you're someone who has not done buy now, pay later, on the alternative side, I'll say it's a great way. It's 0% interest, but you have to manage your budget and make sure that you don't overspend. So it's a great new solution. How we're seeing it, it's just you're paying more than you used to pay with the small medium.
But you have to manage your budget, because even though it's interest free, there are fees for late payments, right? And maybe it's not like default on your credit card company, etc. But still, there are consequences. So I would be a bit more conservative on this one. But related to the partnerships, David, you mentioned that why wouldn't you partner with Affirm and others? There's some commentators who think that, for example, Walmart is building out its own fintech unit, Hazel, and they had a partnership around it, but they want to go in-house. What would be the benefit, right? I mean, you are a retailer, so why do you want to go to financing? Also, nothing new, but in the past, it was a bit mixed success, no?
You want to own your data. This decade is the decade of data. And when you're a company like Walmart, who's coming up head to head against Amazon, they want to own every part of the supply chain. And that data is so valuable on the behavior of your customers, from detecting fraud to selling more to offering coupons. So I can see why Walmart wants to own it. And they've gone through acquisition sprees. You may recall there was the day when Walmart had bought Jet.com, and that has been instrumental for their success to compete against Amazon. And I think beyond that, as they are a global empire, when you're a company of their scale, you can have your internal units. So there's, Walmart credit cards, Walmart debit cards. So it only makes a natural extension to have Walmart buy now, pay later.
Right, interesting space. And coming back to what the founder of Klarna said, that they are happy with their organic strategy and all this. That's all very nice, but frankly, they also announced yesterday or today that they are entering a partnership with Stripe, right? So Klarna and Stripe will partner up. It's not an acquisition or a merger or anything like this. So you can argue that yes, it's still an organic strategy, but people are finding different ways how to compete in this heated space. A lot of people love it because there is a huge growth. I think they are a bit quiet on the profitability, right? And also on the algorithms. Some of these providers say we don't check credit check, it's all good. You just go and buy stuff, right? So there used to be a song like this by Shania Twain. She also said, we just want to consolidate and buy more stuff. So I would say let's be careful with this. And also, if you're an investor in some of these companies, let's look at the bottom line. Let's look at the process. And of course, on the plus side, they're probably using AI, machine learning technology coupled with the data. They are modern companies, not like some of the incumbents. So of course, you can then offer this sort of financing on smaller tickets, which wasn't possible before because you have to do it sometimes partially also manually, and that means you need to have a higher ticket, so this is worthwhile at all. And now this is changing, which is great because we talked about it last month as well. When you look at the trends from the pandemic, one of the things you see in fintech is the emphasis on the financial education, managing your finances, but also inclusion. And it's not just a phrase, right? But you can see it in many different parts of the world and in different segments. Basically, some of the segments of the population were unbanked because it was just too expensive to reach them by huge incumbents. They have such a machinery. Once they raise their right hand, they need to They need to charge you 20 grand for assessing a loan if you are a small business. So we also heard a lot of the stories about specialized solutions for small and medium-sized businesses, and I think that's great. But now I want to maybe talk about one more M&A situation. Of course, I spend a lot of time with M&A, so maybe I'm a bit biased. But I like to see that the fintechs are also growing up and they may be buying some of their competitors, just like the big tech companies used to do. So of course, big company headquartered out of London, but trying to make it also in the US is Revolut. And Revolut also made their first acquisition, from what I understand, ever, when they bought a company called Wanted, and or they acquired the full team from Wanted rather, which was a 5-strong team from New York, very small, frankly, but it has 100,000 users, and it sits in HR tech space. So by the way, this actually fits very well with our podcast, because when I always explain to potential guests that it's a voice of fintech, but it doesn't mean we're talking about P2P lending or payments apps or things like this, but everything in this world can be a fintech apart from maybe life sciences. So you see Revolut is buying a company here in the HR tech space that calls themselves headhunting as a service, right? And that it helps to bring down the cost of hiring top talent. Now, what is it going to be about? Nick Storonsky says that they can help them with their new products and services. So let's see where Revolut is going. I think the issue there is when you hear about this B2C fintechs, of course, they are rock stars and they do something very well. They focus on 1 or 2 points in the value chain, which have been a problem for the incumbents to do right. But it also means that probably they have 1 to 5 products and no more. But when you look at the typical bank, you probably see that they have 250 products. So let's see if these fintechs mushroom to that size or towards that direction. Hopefully they don't become as bloated and slow. But that's very far down the line. But in the next couple of years, you will see the partnerships, you will see the acquisitions, you will see turning themselves into a marketplace. So not all the companies like Revolut, they don't need to provide deposits and lending. They can partner with others, or they do forex well, of course, but some of the banks like N26, etc., they can partner with Wise, and you can then send the money all around the world through that, and they do a revenue share between themselves. So that's a different way of doing things. One comment I'd like to make on the incumbents, because it's quite interesting that one of the largest banks in the world, including the US, Hsbc, is now entering into the space which is called banking as a service. And banking as a service for them as a big incumbent is something really new. I mean, they're going to work with Oracle's NetSuite cloud business and accounting software, so they can tap into the HSBC's payments and business technology or business banking technology to send and receive money automatically. So, for example, you can have an expense report that will be automatically filed through NetSuite and then paid out via HSBC without any people being involved. So, maybe one question to you, David, as well. What do you think about huge banks and incumbents also trying to say that they are doing banking as a service? That wasn't something that we heard from incumbents until now.
Oh, I love it. HSBC is my private wealth manager. So, I work with HSBC quite a bit. So, and I've always found their technology fantastic. And what I've loved about them is it has not always been, let's say, the most innovative, but it's been reliable. And moving money globally, it's always worked, and it's been a global product. So you're tying up 2 behemoths in this space, HSBC Global, Oracle Global. It's super smart, right? Oracle, tried and proven technology, HSBC, tried and proven banking, both international players. So I think they're probably targeting their efforts more on the private wealth side of the business, but it should be interesting. I know just last week, HSBC sent out to the PWM clients about their new apps, about their new global remittances and processes. I'm sure that's tied into this technology with Oracle. So I think it makes a lot of sense. It's exciting to see that them shaking things up and realizing that even though you're a big bank, you can still.
Yeah, great stuff. I'm also HSBC alumnus, right? I used to work for them in London before the financial crisis. So interesting to hear about this. Back then, nobody talked about fintech, right? That's another funny thing that now everyone says, oh, we were the original gangsters, we were the fintech before the term was coined. Yes, but you need to kind of rewrite the history sometimes. So that's interesting. Everybody wants to jump on that. Now, one more thing maybe, and I'll leave the M&A behind, is that in last few days we've seen some rumors about PayPal buying Pinterest. So now PayPal denied the rumors, and the Pinterest share price tumbled. What do you think theoretically, if this were to happen? Does this make sense? Does it have any strategic rationale? How do you see it, or what did you hear from people in New York when you go out and network, David?
Yeah, I mean, well, first, everyone knows PayPal, right? Being here since the .com, incredible with their new offerings this year in crypto and getting into remittances, and PayPal continuing to expand their global footprint. The question became less about what PayPal would do, but how Pinterest would continue to thrive or survive. Remember just a few years ago when it was talked about where Pinterest, you could buy inventory directly from the app. You could find the pin, and then it would connect you to merchants on Amazon, similar to, of course, what Instagram later rolled out and other apps like that. It didn't actually become very successful for Pinterest. I think they've struggled. Even once they went public, they got their ad dollars up, but they just have not been able to lay a great part of that market. PayPal, why would PayPal want Pinterest? The data is incredible. I mean, think about this. If you're thinking of apps like Foursquare and Instagram with the data, the same thing is with Pinterest. Having so many millions of users with images and text and context and shops, Pinterest is like Etsy, but better. I mean, you got such incredible access to these curated lists. It would be actually very strategic for PayPal once, the co-owner of eBay as well, with their roots in the e-commerce space. It sounds like, again, this deal fell through. Usually when a rumor comes out like that, there was definitely conversations to be had, but looks like it's not going to be a match made online for these two.
Let's see. I mean, also years ago, I've seen I've heard some bankers talking about the fact that you hear the rumors once, then it dies out, then it comes back. Once there are rumors, something will happen. Maybe not in this shape and form, but something might happen. So let's see. I think Pinterest came up with the results that were not amazing, but on the other hand, I think we all love it, or we don't hate it, at least, right? So I think it's a great company. We had Pinterest on the podcast. I spoke to Sarika Sagwan, who is the global head of strategy and marketing for financial services, and we talked about how you can see Pinterest in a different light, because you have lots of users who are there on their side who are motivated users, and why wouldn't you use Pinterest for your content marketing strategy, even if you're a bank or you're fintech, etc. So that's what we talked about. It was a while back at FinTech Talents Virtual North America, also with Jim Marous, of course, from the financial brand, but quite an interesting and surprising one. Yet again, an example of fintech it's so much more than just a payments app, right? So I think that was great. Now, moving on, I'm thinking maybe some new people came in. We're just talking about some of the news related to the fintech world. some of the ones that are positioned as potentially big success, and we're trying to dig into some of the cracks in the story here. So that's what we're trying to do. Now, of course, we'd like to hear from you as well. So if you want to say something, just raise a hand. That's a new feature on Fishbowl, and then we can give you a mic and you can speak as well. Well, because what we'd like to hear from you is also, what would you like us to do on the podcast? If you would like us to dive into particular topics, or if you have ideas for the guests as well. Of course, you can email us afterwards at info@voiceoffintech.com, or just to go to the website, voiceoffintech.com, and you see the contact form there. But you can also tell us now what sort of topics you would like to learn more. Here we cover a wide range of topics, but on the podcast we have guests, and we can of course dive into it much more depth. What I wanted to mention here is, now moving on to, let's say, blockchain and things like this, without talking about what the Bitcoin price will be by Christmas. Nobody knows, right? And also, there's a lot of people who are big fans, and they love it. But I think when I coach fintech courses at a number of business schools around the world, we look at the pros and the cons. And I think where the consensus seems to be emerging is that the Bitcoin is more, let's say, a storage of value, but it's difficult to use it for payments because it's moved so much. So maybe the stable coins or CBDCs are the alternative. And if you want to build an ecosystem with apps and the smart contracts, maybe you should look at Ethereum or other things. People also talked about it on the podcast, for example, with me, where you need to also look at the economics. So the minings and all that stuff has a cost. There are fees associated with it. But when you look at what's built on the blockchain, you see there are a lot more fees extracted on Ethereum than on Bitcoin lately. Even though Bitcoin is maybe more in the spotlight. So I talked to Wojtek from Superbit a few weeks ago, because it was very close to my heart that his company is starting to support the NFT auctions related to tennis. And if you haven't met me, I can talk about tennis all the time. Maybe we should have a tennis discussion as well at some point, or business of tennis as well. And if you look at the US Open final, it was very interesting on the women's and the men's side, of course. And Leila Fernandez is an ambassador of Superbit, and Superbit put out the auction there with the behind the scenes videos of Leila after the final, and then when she flew back to Canada. And then, of course, also when she went to Met Gala, things like this, you could buy the diamonds, as they call it, and then get the video, get the NFT. We talked about the logic of it. Why would you want to buy a video like this? What is the similarity with baseball cards, for example? Is this all a bubble or not? And also all kinds of protocols that you need to consider that would be suitable for this or not. So couple of words of wisdom from you on NFTs as well, David. Where are you on this? Do you have any, or are you planning to buy some for the holidays?
Oh, what should I buy for the holidays? Well, I'll tell you, I'm a big fan of tennis too, and I know Rudy will definitely hit that up at the US Open. So I like what Superbit did there. I think it's the early days for NFTs. We see companies like SoRare who have grown so much around fantasy football, soccer in Europe, and others. The layers are still being built out. There's 6 different layers for NFTs that are getting built out. Like there's all these layers in every protocol, whether you're looking at Ethereum, whether you're looking at Near, whether you're looking at Solana or the protocols. There's a lot getting built out. Where will it land? It's still early for me to tell. There's been a lot of new frameworks coming up. I think it's the early days. There's an NFT conference this month in New York City with NFT NYC. So I think there's a lot to be said. I just don't want to speculate too early just yet. Maybe for Christmas, I would like to buy an NFT Christmas tree.
Yeah, that would be quite fun. But of course, this is a nascent technology, nascent field, so you got to watch out. But I think There's one very easy benefit, right? When you look at the baseball cards, and if you then decided to sell them, then of course it would be quite difficult. Nowadays you have different platforms, etc. as well, but you would need to ship the physical cards, right? And with NFTs, you can do it quite easily. So I think that's great. Now, otherwise, of course, on the pictures or the sports memorabilia, you've got holograms and things like this. So this is also an equivalent of that. Now, so that these are the practical benefits. If you look at the value, that maybe is a different story, right? I mean, I look at the OpenSea, at some of the paintings as well, and they are great, but are they worth $60,000? Of course, I'm not sure, right? And I wanted to talk about the CBDCs and also, hear from you, David. What do you think about Salvador, or El Salvador? Apologies to, using the Bitcoin there, and now Nigeria is going to or launches already e-naira, so the e version of their currency there. And I just connected with our host there, Adijoke, and she says some of the banks are already offering this as well. So you could buy this and hold the e-currency. So the equivalent in the US would be e-dollars. So first of all, using or for a country to use Bitcoin as a currency, for whom can that make sense? Potentially, yes. In emerging markets, it could make sense, but is this the way to go? Is this really suitable for a currency if it's not set up as a stable coin? And the second question is CBDCs. I also talked to, of course, Ripple. That they obviously have their own challenges this year in the US, but one of their arms is working on CBDC solutions. And I talked to James there, who said, look, if you just do an electronic currency as it is today, it is electronic anyway. So there has to be some other additional benefits. So two things maybe here. Let's bounce off some ideas. David, if what do you think about Bitcoin being adopted as a currency or means of payment across the country, like El Salvador, or CBDCs in general? Do they have any benefit, or is this also some kind of a bubble that maybe should be?
Yeah, so I don't think decentralized technology is going to go away anytime soon. And here's why. Just a few months ago, when China had its latest crackdown on mining and actually for Bitcoin and Ethereum, you saw the hash rate fall to the lowest it's been in years. And within 3 months, the hash rate is now back up above the peak levels when mining used to be in China, right? So these nodes and these validators are continuing to be further up, and whether that's proof of work or proof of stake, we're continuing to see the advancement in the industry. Now, determining how valuation is assigned to these coins or these cryptocurrencies as a stable coin, we think initially of values like Tether to the US dollar, a 1-to-1 ratio. But then how do you look at it at Bitcoin? A lot of the conversations have been Bitcoin is to gold, right? It's an inflation hedge. It's a way to build on assets, and it's not necessarily like one of these altcoins, we'll call them, that will be gone in a few months. It's here and it's here to stay. Where will its value end up? It's to be determined. And I think the challenge with Bitcoin is that if you're hedging that for your currency, the transaction rate is quite slow, and it's very hard to own a unit of it because of its value, and that value keeps going up, which is why a lot of development went to Ethereum, and then a lot of new development has gone to Solana and other tech stacks as well. And I think a lot of countries like Nigeria and El Salvador and others are turning towards these to peg their currency because they haven't seen the United States come in to say, well, let's peg to the dollar, or they haven't seen the EU come in and say, why don't we peg to the euro? And so this does create the dilemma of, if you're a developing nation, how do you protect your interests? And if you're not having your government protected, or you're not having other outside agencies, it might be that partnering with these different cryptocurrencies could be that solution to stabilize inflation for your country. So I think it's really fascinating. There's other actually interesting networks. In fact, one that we're talking to that we'll be bringing on to Voice of FinTech next month is IOTA. And IOTA does a lot around securitizing data. They're actually been in the space for a while, so it'll be exciting to see what the IOTA Foundation has been building out of Berlin around data and all things data in cryptocurrency.
Right, and a lot of people don't, or not as many people talk about. All right, and not as many people talk about the quantum computing as many are talking about the Bitcoin, right? So I wanted to also bounce off some ideas on the quantum computing and the race there with you, David, because I always worry that we say, for example, without too much thinking, that the blockchain is immutable, right? But when you look into the quantum computing, it is understood that if it ever works, probably by 2035, you will have a quantum computer that will be capable of breaking the cryptographic scheme that is essential to immutability of the blockchain. Some of these protocols, therefore, can be open to quantum attacks and some of them not. So am I thinking or being too worried a bit too soon, or what's your view on this? And if you also host your podcast on AI, right, and humane. So I think it's right up your alley. Would you be backing IBM versus Google, or how do you see the quantum race?
So first on immutability, in fact, there are some chains focusing on immutability. In fact, there's a level 2 or level 2 infrastructure called Immutable, which is built on top of Ethereum, Solana, and others. They compete with Polygon, and they're in that space. So there is immutability that we're seeing on chain. My area that I focus on is all things data. So that could even be, yes, on-chain data and crypto data and quantum data, but I am by no means a quantum expert. One of my good friends, Nardo Manalato, in fact, is a crypto and quantum thought leader, having worked in quantum for a couple decades, and has an incredible board focusing on quantum. And in their quantum accelerator, what they saw, in fact, over the last few years is companies that are building quantum products are getting acquired and they are scaling, and the technology is getting closer to adoption. Two companies that they really focused on, became unicorns. And these are just in the last few years. One of them focused on deep tech with quantum, and the other one is AI products with quantum. So I think it's the early days, but when you think of a quantum to get practical, it's about solving global problems. It's having a new compute paradigm, and it's focusing on technologies that just need so much compute that CPUs and GPUs just can't get there as fast as we need. And I think it's the early days. Just as I think that the 2020s are the decades of data, and the 2030s is when AI will mature, I think 2030s and late 2020s is when we're going to see quantum start to mature, and it's all going to be converging in the 2040s. So it's very far out thinking, but there are exciting startups today in the quantum space, and it's only getting started right now.
Right. And when I see these pictures of quantum computing, I always have to come back to, I guess, my childhood. And there is one obscure science fiction TV show that I liked, and it's about visitors from the future. Basically, in the 25th century, the show shows that the humankind is run by a computer, and that computer looks just like the quantum computer, and it warns the leadership that the asteroid is going to hit us, and that's why they need to go back to the 20th century to find a scientist who apparently thought that he devised the formula how to move continents, but it was in his notebook that got burned down when he was a child. So that's why they go there. But long story short, they come back with his teacher, and the teacher sees that this computer is off balance. So all he does, he puts like a little bit of the wooden stick underneath that. The computer balances, and then it announces this was all an error and there is no problem and the Earth is safe. So here is just a bit of a message to everyone. For example, when you work with AI, when you work with the numbers, and you are senior managers, you are the experienced business leaders, you should always just step back and think about, does this make sense, right? And it's not about getting the answers from some sort of a model or machine learning that is technically correct, but it's practically useless, right? It's about something that works for business as well. So just a little bit of a detour, memory lane, but I also.
But it's incredible.
Yeah.
It's incredible how in just the last couple of years, for the listeners here, you have this company Rigetti, and Rigetti focuses on quantum compute with qubits. They raised almost $200 million and they IPO'd at a $1.5 billion valuation. You have Ionic. Ionic is working on trapped ions in quantum. They also raised 84 million, valued at $2 billion, IPO'd. You have a cybersecurity company out in Europe called Arkit. Arkit raised 400 million, valued at 1.4 billion, focused on cybersecurity and quantum encryption. So it's no longer just the scientific dreams of tomorrow. It's starting now, and I think we're accelerating with all things data, and that of course leads to AI, quantum, Web3.
Right, and to finish off the loop on the blockchain and related topics, I talked to Peter from Mercury IO as well on the podcast this month, and it's been great because his mission in life is to make the exchange between fiat and crypto completely seamless, right? You have one wallet, and there you have your crypto, you have your fiat currency, and you can pay with whatever you like. So that's quite interesting, building bridges between the traditional world or the new world, so to speak. I also learned a new buzzword this month, and maybe that's my ignorance. I didn't know that before, but apparently there's not only DeFi, but there's also TradFi, right? So some people want to build connections between the two, make sure that the incumbents also embrace it. And that's Mercury, but also I talked to Alliance Blockchain, which is devoted to building an ecosystem for all kinds of DeFi applications as well. So that led me to a book that I'm reading, which is very basic, How to DeFi. So any comments on the DeFi potential, and especially when you look at the incumbents, will companies like JP Morgan are going to do more in this space, or do you think they will watch out and maybe once it's more proven, they will step on the gas a bit more?
Well, I think it's the early days of DeFi, DeFi being decentralized finance and all the applications there. You can just go to DeFiPulse.com and see how many billions of dollars some of these DeFi chains are already working on. And it's just incredible to see the growth, to see that there's over $100 billion in DeFi today. It's growing at a strong clip, somewhere up to 20% monthly. I think DeFi is only natural. The next evolution of the companies we've talked about on Voice of FinTech and on this series, like Revolut and other ones about doing remittances and having global payments, it's making it more accessible. It's lowering the fees. It's decreasing the access with less barriers. And speeding up everything better, faster, cheaper. Will companies like JP Morgan ultimately come in? I'm sure the answer is yes. Many of the big institutions like to have a strong opinion, as I think the leaders at JPM do share every once in a while. But I do think Web3 is here to stay. I think DeFi is here to stay. It's still the early days.
Right. I mean, of course, the question is sometimes, whether you wait too long and then you can still snap up a competitor if you don't have a capability and all that stuff, but maybe it's going to cost you dearly if you waited too long. But if you are a regulated bank, maybe you don't really have a choice, right? You cannot go into certain areas before your regulators are also comfortable. So I wanted to finish off on my pet grievance or pet interest, which I think is quite related to what you do as well, David. You said all things data and humane, and it's your work, and also the Business Angel Syndicate, right? And I talked to Penny Schiffer that is quite known entrepreneur in Switzerland, and she's now in San Francisco, meeting the VCs and raising money for her company, Race.ai. And basically the idea there is, or the premise is quite simple, is that when you are a VC, it's no longer possible, or who knows whether it's ever been acceptable or a good practice to just rely on your network when you do sourcing of the deals. Of course, it's important, but if you start with just friends of your friends, what ends up happening as well is you don't have the diversity. For example, somebody told me, you have all the white men in in the VCs, and then they invest in people they know, and then you end up having founders who exactly look like them. So how is that ever going to work? Because you're also funding the teams that are building products for other people. So it would be even, from a selfish perspective, very much smarter to have those people around so you can build a better product. So how do you then go from just sourcing from your network to do something a little bit more systematic, something a little bit more scientific, so to speak? Let's see. Some of the investors that I talked to, it's going to, it will be released soon. For example, Fidelity, they developed a thematic view, and they dig into this and they research it, and then they proactively go after the potential targets. JP Morgan actually, told me the same thing as well. So, but there are a lot of investors who work like in the good old days in San Francisco. If you were not within a 1 hour drive from Sand Hill Road, then you didn't get the funding. So what Penny here is trying to do is to build an AI tool, which is going to be like a crawler, going through all the information out there for you in line with your preferences. And then you would need to research this and review the potential ideas every week. And depending on this, the AI will learn and will give you better ideas. And the point there is to look at things that maybe you have missed. So it's if you use in a European context, she mentioned like, okay, maybe you're so well networked, 80% of the ideas in Germany, but you need to know 100% so that your fund is successful. So how do you do it? And you also want to get there faster. So that means it's smaller tickets. So you will not be able to have the army of the of analysts doing all the research manually. So you do need a tool, and of course that tool needs to learn with time. So it should be machine learn based, etc. So what do you think about that, David? Can we institutionalize this outreach, the deal sourcing, or it's just a fantasy? Because on the other hand, some people tell me, for example, from London, that what they don't like about databases and things like this, that the information is dated and the information is often incorrect. So then it's useless anyway if you don't have the data quality. Any sort of web crawler or AI-powered machine that is using incorrect public information is not going to help you. So what is your view on this?
Well, first, whether you're looking at any part of the private equity and venture capital industry as an angel investor, as a solo capitalist, or as a general partner, it is a relationship business. And those signals and trends that you're tracking towards, whether it's in a database or whether it's augmented by tools, is only as powerful as those relationships. And the challenge happens to one of the first early points that you mentioned, is that underrepresented minorities, URMs, like myself, often don't have access to these networks. These are things that we build over years and years to play at the same level as traditionally the straight white male who has led in Sand Hill Road and other cities. We're seeing a shift in the ecosystem today where that's no longer true, where we're seeing Generation Z, Gen Z investors. We're seeing URMs like Harlem Capital in New York and others from diverse backgrounds beginning to lead by having diversity as a secret sauce, as a competitive edge for what they're building on. And what I believe in venture, whether you're going at it as part of your portfolio diversification strategy as an angel, or you're leading as a capitalist, your network is only good in the moment. Your network is always changing. And if you don't continue to build your network in 5 years, well, the network has changed as well. So what that means is today, to be the best possible investor, you do need to augment your relationships with tools. So I love what that founder is doing. I love what they're building at Raised, because as a person, you only have so much time, right? You only have so much utility that you can be in meetings and go through emails and study pitch decks and go through due diligence. And if you can have tools that can accelerate that, whether it's through discoverability or through honing your edge to be human augmented in the space, I think that's really exciting. And I think that these tools also enable the new generation of VCs, those who don't traditionally come from Sandhill Roll, to be accelerating and leading in it.
Right. So a lot of the people also say they do both in terms of inbound and outreach, of course. But I think only a minority, at least in Europe, I think it's more common in the US. Only minority uses some sort of AI-powered or machine learning tools. I think the reason is that in the US it's so competitive, right? So you have to get to the deals quickly. And then you need to build the relationships. You're right. It's all about the relationships. You need to have a network. But I always say, so what if somebody has a great idea from somewhere in the mountains, and I've read somewhere that you have founders who are in the network or who are not. So even if you're not in the network, you should be able to get your idea off the ground, and you shouldn't be limited by the people you know. Maybe you were just not, you didn't grow up in that kind of place. You were not born into that kind of network or privilege. So there should be another way. And of course, there is another debate about the algorithms and the biases and all that as well. So it depends what you build into it. But I think it's great that people think outside of the box, and they want to give everybody a chance. And in return, they will be better investors, and everyone will be better off, I think. So let's give everybody a chance and a fair treatment, of course. So on that note, I really would like to ask if there are any questions from anybody. All right. Hopefully, we'll get some questions next time we do this. As I said, there's a new feature on Fishbowl. You can raise your hand, and then we can give you a mic, so it's moderated. But in any case, I think this has been great. We mentioned a couple of examples what we covered on the Voice of FinTech podcast. Oh, I see. All right, there is a Smita who has something to say. So great. All right. Hi, Smita. How are you today?
I'm good. How are you? It's more a question, though. You made a really interesting statement where, in the world of venture capitalists, URMs, it's a little more difficult to go in as an URM because a lot of it like B gets alike more. So how do URMs, obviously based on my name, I'm one. How do people like me get into the mix if these are some of the opportunities?
Yeah, I'd love to share a little bit on that. So to rephrase the question is, how do you get access either to deals as an angel, or how do you get into the world of VC? Is that right? Yep. So two things I've done personally. So I'm part of OnDeck. I'm in the OnDeck Angels program. OnDeck is YC for the 21st century. So I'm part of their program right now, one of their cohorts, and they're incredible. Great things to say about OnDeck. I'm also part of Founder Institute. They have a program called VC Lab, part of their fifth cohort. Their most recent cohort now has over 1,000 applicants. I'm not saying you have to do accelerator programs like OnDeck and Founder Institute, but I've had great experiences with both. Happy to connect with you and talk about these and other programs as well. for me, they're so valuable because of the community and because of the leaders who've been there, done it before. It's just so incredible to learn from that. I think those are some resources I'd recommend.
All right. Well, thank you, Smita, for the question. So if you have more questions, you can always email us as well, as I said, at info@voiceoffintech.com, or you can go to the website. There is a very simple, nice form there, and you can just give us your ideas, also what you would like to hear on the podcast. It could be about how to break into the world of venture or business angel investing, or how to get funded if you are URM, etc. Let's connect and let's learn more about the world of fintech. It is huge. The opportunities are tremendous. You also could see the level of fundraising, level of valuations. It's at the record heights this year. So hopefully we won't regret it. Hopefully this is sustainable, because we'd like to build sustainable businesses or be around people who do. So thank you so much for joining us. You can also look out for the recording of this if you missed part of this. I think we'll get the recording from Fishbowl, and we can release it as a podcast in the next couple of weeks. So thank you so much. And thank you, Smita, for your question, and David for co-hosting.
Thank you, Rudy. Thanks, everyone. We'll see you again soon.
Thank you for listening to Voice of FinTech podcast. If you haven't already, check out also voiceoffintech.com, where you will find all the episodes and additional resources related to the podcast. You can also subscribe to Voice of FinTech on Apple Podcasts, Spotify, Google, or any other podcast app that you like. If you have any suggestions on the topics or guests, or how to make this podcast better for you, please email us at info@voiceoffintech.com. Happy to hear from you. Thank you.